video that will project right after the welcoming remarks.
Okay.
دي اللي هي الفقرة الإعلانية.
ممكن ننزل إعلانات بنك القاهرة طيب؟
يا
لما
ريت.
تبقى المرة الجاية لما تبقى سبونسر.
لا واحنا وي ار.
لا انت ايفنت بارتنرز في فرق.
والله ماشي.
بس anything you want يا طارق اعملها.
الله يخليك يا نادية. ثانك يو.
يا
So Nadia, are we live?
Yes, now we're live. Yes, but still people are coming in.
Okay.
Oh, it's 32 already.
I think we can start.
Okay. Ladies and gentlemen, distinguished guests, on behalf of the board of BEBA, it's my pleasure to welcome you to this webinar organized by BEBA on the new banking law. The ratification of the law has been long awaited, and as we all agree, it's an important step in keeping up with the best practices and international regulations. It's been viewed by the International Monetary Fund as a positive development, strengthening the legal framework for the Central Bank of Egypt and the banking sector in general. The topic will be discussed today amongst our expert panels of speakers. Dr. Ziad Bahaa-Eldin, Managing Partner, Bahaa-Eldin Law Office, in cooperation with BonelliErede and former Deputy Prime Minister. Mr. Tarek Fayed, Chairman and CEO, Banque Caire. Mr. Ahmed Issa, CEO, Retail Banking, Commercial International Bank, CIB. And Elena Sanchez, Managing Director, Head of Financials, EFG Hermes Research. And the session will be moderated by Karim Helal, Investment Banker and Country Director, Egypt for Colliers International. Thank you all for taking the time to join us today. I'd like to recognize and thank our main sponsor today, EFG Hermes. I'd also like to thank our event partners for their continuous support, Banque Caire, CIB Egypt, Polaris Parks, QNB Al-Ahli. Before I give the floor to Karim to moderate the session, would like to share a video from our main sponsor, EFG Hermes.
Sure.
Very
Karim, the
nice.
floor is all yours.
Hello. Good morning, everyone. I hope you can you hear me? Okay, great. Ladies and gentlemen, good morning and welcome to this webinar on the new banking law in Egypt. Resilient, solid, well-capitalized, innovative, adaptable. Some of the words used to describe our banking system, of which we are very, very, very proud indeed. The Egyptian banking system, I think we will all agree, is definitely one of the key pillars of the Egyptian economy. To many, we view it as the gatekeeper, keeping Egypt and its economy safe from the various crises that we have witnessed in recent years. The Egyptian banking system has safely navigated us through the tumultuous time of the financial crisis in 2008. And again, as we speak, it has and continues to safeguard Egypt, not only from an economic perspective, but also social, from the continuing and devastating fallouts of the COVID-19. Therefore, anything that has to do with the Egyptian banking system is of great importance and, of course, of great relevance. Today, we have a very important topic to discuss, which is the new banking law that has just been ratified. This, I would like to start the discussion with Dr. Ziad Bahaa-Eldin from a legal perspective, let's say. In a nutshell, what is new in the new banking law? What has been brought in? What has been taken out? And in sort of simple terms, what are the salient features from a legal perspective of this new law? Dr. Ziad.
Thank you very much, Mr. Helal. Thank you for BEBA for organizing this and for inviting me to be part of this very distinguished panel. Because of the time constraint, let me get straight to the point and respond immediately to Mr. Hilal's opening statement. So I will comment, just give you very brief remarks on the law, purely from a legal legislative point of view, not from the operational or financial point at all. And I will summarize this in a few key aspects of the new law. Number one, when we say in Egypt banking law, we do not mean the law that regulates banking operations. We mean the law that regulates banking supervision. This is because we are part of the continental European French legal tradition, if you like, where banking operations, opening of accounts, credit guarantees, the commercial side is all governed by the civil law, the commercial law, the law of civil procedures. So the banking law is a law about banking supervision. That's my first remark. Number two, we all know that the new law was published in the Egyptian Gazette, which is the official publication site, on September 15th, and it stated that it came into force immediately on the following day. So it has already been in application from September 16th, 2020. The law also stated that banks and other regulated entities, a point I will come back to in a couple of minutes, banks are granted 1 year in which to comply and adapt to the new law. So we all need to comply from the banking perspective by September 15, 2021. Now, the law does give the Central Bank of Egypt the power to extend that compliance period, but my understanding of this law from a legal point of view, from this article, is that this would not be an extension granted to a bank in light of its own circumstances. This is a general rule of applicability, and therefore that extension will be either granted to the whole banking sector or not at all. So I advise that we make sure we comply by end of that first year, unless we hear otherwise from the central bank. Now, one of the most important changes from a legislative point of view in this law, and it comes in one of the very early articles and seldom noticed, is that it grants the Central Bank of Egypt the full authority to issue all executive rules pertaining to this law. This is very important because up until the previous law, the one that was issued in 2003 and just got abolished by virtue of the new law coming out, in all previous legislation, the executive regulations or the main executive regulations of the board were issued by the President of the Republic upon the recommendation of the central bank and the ratification of the Prime Minister. Now, this is entirely in the hands of the Central Bank of Egypt. This is part of the additional independence of the Central Bank of Egypt granted in this law. But this very important point to appreciate that now the Central Bank of Egypt is the only
Dr. Ziad, you put yourself on mute.
Sorry. Important to appreciate that this means that the Central Bank of Egypt, as a fully independent body, now will be issuing the secondary legislation, all the rules and decrees and so on. The third point is to appreciate that the Central Bank of Egypt also has an expanded scope of supervision in this law compared to the previous one. And by this, I mean two aspects of expansion of scope of regulation. The first one is that it is the only regulator of the banking sector. And what this means is that up until the issuance of this law, there was some debate in Egypt as to whether issues, for example, pertaining to competition within the banking sector or consumer protection within the banking sector will be supervised by the CBE or by the relevant regulators, i.e. the competition authority or the consumer finance authority. There was a legal debate there. This was resolved in the new law. And now the Central Bank of Egypt is the only supervisor, even when it comes to matters of consumer protection or competition regulation within the banking sector.
Dr. Ziad, mute.
The other aspect of expanding the scope of supervision of the central bank is that some of the activities, non-banking activities, are now clearly under the central bank. By that, I mean particularly credit guarantee companies. They were debated whether they were under the FRA or the central bank. Now, the activity of credit guarantee is fully under the Central Bank of Egypt, as well as the regulation of e-payment companies. So this is all by means of expanding the scope of the supervision of the central bank. The next point, and I'm not going to take long, is that the powers of intervention of the central bank are also wider. There is a new chapter, an extremely important chapter in the new law about banks in distress or banks that will potentially fail. But before we reach the point of failure, there are two previous steps, two types of measures that the central bank can take. One is called corrective measures. The other is called early intervention. And they both provide the Central Bank of Egypt with quite wide powers to intervene in the case of a bank which is not yet in a full-blown out case of distress, but looks like it's getting into trouble. And therefore, there are two types of measures that the central bank can take. We then move to the following point, which is a bank that has actually been officially declared in a state of distress. And here the law, for the first time in Egypt, completely takes that management of a distressed bank within the banking law under the Central Bank of Egypt and explicitly says that the bankruptcy rules under bankruptcy law will not apply to banks in distress once they have been declared by the Central Bank of Egypt to be in a state of distress. In other words, the Central Bank of Egypt here will replace the bankruptcy court in managing the process of trying to salvage the bank. Last 2 points remaining is that the law also has a new chapter which fully incorporates every aspect related to e-payment, to technology, to financial technology, to fintech. And although it does not give a lot of detail about what kind of supervision, it simply grants the Central Bank of Egypt the power to issue the rules for any kind of fintech or electronic payment system, to supervise the entities, and to take corrective measures against those entities. So it gives the central bank the legal ground and the legal foundation for being able to properly manage anything related to e-payment. Last thing I will say, and I'm sorry for taking too long, I will conclude with that with which I started. We have 1 year for compliance. It's already been almost 5 months. Unless the Central Bank of Egypt renews or extends that compliance period, we should all work on the assumption that 15th of September will be the end of the 1 year, and therefore a lot for banks to do, including some minor adjustments to the conflict of interest rules, some change in the bank secrecy procedures, composition of committees under the board of directors. Board of directors should no longer be a credit granting authority. So some compliance issues must be dealt with before, and of course, raising the capital of banks to 5 billion Egyptian pounds minimum. All of this has to be done before 15th of September, unless the compliance period is renewed by the central bank. I'm sorry for taking longer than I should have, and for speaking quickly, but plenty of ground to cover. And this is, I think, enough for my initial summary of the law. Thank you, Mr. Leader.
Thank you very much, Dr. Ziad. Very, very enlightening indeed. I think we will come back to you later on, because I know there are some questions that are coming in. Some of them, I think you are best placed to answer them. So we will come back to you. Thank you so much. I will then move to, we've heard the sort of the legal perspective of the law, and now I would like to move to Mr. Tarek Fayed, Chairman and CEO of Banque, which is, as we all know, the third largest publicly or government-owned bank. So, Mr. Fayed, what does that mean for you as a commercial bank? The first question, I think, has to do with what Dr. Ziad said about the period. Is this an achievable target? Or do you think it is reasonable to implement and adhere to what the new law requires within the period indicated of 1 year? That's the first side of it. Secondly, from your point of view, what does that mean in terms of competitive edge? Does it help you or neutral? Does it limit your ability to be more competitive in this market? Is it a long ask in terms of capital adequacy? And thirdly, do you see any effect from your perspective on corporate clients in particular, large corporate clients?
Okay. Thank you so much, Karim, for inviting me to be part of this webinar today. I'm glad to be among my fellow colleagues from the financial industry. Maybe answering your first question concerning the period. I believe that basically the banking system in Egypt, as you mentioned in your introduction, is solid and resilient and enjoys adequate liquidity and solvency levels that could cater for compliance with any sort of prudential regulations that could be set by either local or international standards. We have been witnessing, I would say, in the past years, lots of crises that we have been facing, either starting from the global financial crisis, followed by 2 revolutions, and most recently, a flotation of a currency under a successful reform program. All these crises, the banking system managed to withstand all of them and to exhibit very strong resiliency to absorb such shocks. Going back to the law, basically, I would like just to give some background about the law the laws in general and the laws in Egypt, typically laws are subject to change every 10 to 15 years. However, I believe that the pace of this change might be faster given the strong evolution or the fast evolutions that we have been seeing on the industry in recent years. Over the past, I would say 10 to 15 years, the global banking system had witnessed a series of events such as the global financial crisis, the sovereign debt crisis, and others, which had a negative impact on financial stability. This has led the standard setter to establish more stringent, I would say, standards in terms of compliance and regulations. Basel, for example, committee issued a series of accords, Basel II, Basel III, and most recently Basel IV, to strengthen the solvency and liquidity levels of the banks, and also improve and enhance governance and compliance standards. We have been seeing most recently also other, I would say, threats or challenges coming from fintech companies and the need for innovation and technology. This basically raised the need for introducing new rules and regulations concerning digital financial services and being more conscious about cyber and security risks. In light of the major changes that we have been seeing on the industry, either on local or global level, I believe that the Central Bank of Egypt was so conscious to come up with a new law, revising Law 88, to accommodate for the recent changes in the industry dynamics and the industry landscape, and to ensure also the safety and soundness of the banking system. I would like here to highlight on the fact that this law has been very well prepared. It took almost 3.5 years to come up with this comprehensive document. Also, as you mentioned in your introduction, that a large number of participants has been involved in the preparation of this law. Special task forces from the Central Bank of Egypt, subject matter experts from in different fields such as legal or law, banking, finance, and others has been participating in the law. And moreover, a large number of international financial institutions and standard setters has been involved also in the review of the law to ensure its full compliance with the international regulatory and supervisory standards. I would like to here shed some light on the takeaways of the law. And I believe that these are very important for the industry at large when we are talking about the independency of the central bank. So the law emphasized on the central bank independence. Also, another important pillar that the law has been stressed on about streamlining the relationship between the government and the central bank to avoid any potential conflict between the fiscal and monetary policies. And we have lived this before, basically, Karim, before the reform program, and there were lots of conflict between fiscal and monetary policies. So I believe that the law here has endorsed this by establishing a number of committees such as the Financial Stability Committee and the Coordination Council in order to ensure proper segregation between the fiscal and monetary policies. Also strengthening the supervisory and regulatory role of the central bank to ensure the safety and the soundness of the system and to strengthen financial stability. This basically took many falls in the law, such as, for example, the central bank mandated banks to increase the capital of banks from 500 million to 5 billion pounds for local banks, and $50 million, and from $50 million to 150 million for rep offices or foreign branches, sorry. Also, the banking law has emphasized on the importance of the fit and proper regime in order to better select the board members and the key function heads within the banking sector. Also, as Dr. Ziad was mentioning, that new chapters has been introduced to this law, and I believe this is a very important sector concerning early warning and resolution framework for distressed banks. Another important aspect here when concerning financial inclusion, the central bank was basically very conscious about embracing financial technology and payment systems in order to promote and elevate the financial inclusion levels. And basically, this encompassed many aspects, such as Dr. Ziad was mentioning that payment companies, for example, has to be either payment service providers or payment system operators, has to be licensed from the Central Bank of Egypt, introducing also a new concept of systemically important payment companies, depending on its size of the business, its volumes and number of participants, in order to also safeguard financial stability. Also, in order to foster fintech and innovation, the Central Bank of Egypt has introduced the concept of a regulatory sandbox, whereby banks and the fintech companies could test their fintech applications in reality for their customers under the supervision of the Central Bank of Egypt. Also, a new chapter has been introduced for consumer protection to handle customer complaints and to promote for financial and banking awareness. And a fully dedicated unit within the central bank will be established for this purposes. So in a nutshell, I believe that all these, I would say, initiatives, especially the new chapters that has been introduced, will help a lot in, I would say, improving the levels of financial inclusion and financial intermediation in the banking system. We, as you are aware, that the banking sector in Egypt captures around 80% of the financial markets, and it enjoys ample solvency and liquidity levels. So I believe with the introduction of this new law, this will, I would say, help in strengthening the safety and soundness of the banking system, and for better financial stability. And also the new law, as I mentioned, has been fostering financial technology and financial innovation and payments. We believe that this will help banks in achieving its financial inclusion objectives and also optimizing its balance sheet utilization for better financial intermediation. Thank you.
Thank you very much, Tarek. This has been very helpful. Well, clearly the reaction so far is extremely positive. Basically, this law appears to be making a very good situation even better, which is great. I think great news for all of us. I would like now to turn to my very dear friend and former colleague Ahmed Issa, CEO of retail banking. Okay, so the first part of my question to you, Ahmed, is pretty much what I asked Mr. Fayed. What does that mean to you as CIB in terms of competitive edge? In terms of, is it easy to implement from your side of the business? Is it cumbersome in any way, and so on? And the second part, I think, really has to do from your perspective as retail and business unit. What does that mean for you? Will it make you more competitive? Will it actually practically help you in achieving the ultimate goal for all of us here, which is financial inclusion? How do you see that working in your favor at this point within what was said already earlier by Mr. Fayed and Dr. Ziad?
Thank you, Karim. First, let me thank you and thank BEBA for inviting me to this panel with such distinguished panelists. Great pleasure to be here. I'll go directly to your question. Ease of use or ease of implementation. The new law, 241 articles, 112 of which are totally new. 34 are replicated from the previous law, and 90 plus articles who are amended from the previous law. Of the 112 new articles, as Dr. Ziad mentioned, more than 30 are around the governance or related to the regulator. The rest involve some of the things that we do in the banking sector. Like all banks, I'm sure all my colleagues across the entire banking sector, I'm sure teams have met, have read the law, have talked to the lawyers. We're coming up with lists of things to do to comply with the new law. Most of the articles actually relate to how banks manage risk, how banks look at risk, and how banks report risk to the regulator. So I think the impact on the customer specifically is not as much as people would expect from such a comprehensive law. And the good news is a lot of the new articles, as a matter of fact, have been somewhat implemented by the regulator. It's already a well-governed industry. And some of the new articles have already been part of previous regulations, like the hiring of executives, for example, the approval of hiring of fit and proper level employees at banks. And these are things that are, I think, we kind of been complying with in the across the industry with. So I don't expect maximum difficulty in implementing, but it's definitely some work is required by every bank in the country, talking to our lawyers and splitting the action plan on the relevant departments. One of the interesting things that probably customers may be affected with is that, for example, the new law clearly stipulates that the responsibility for ensuring that the use of funds is in the exact purpose that was agreed is also the responsibility of the customer. So this is a new new responsibility that is put on the customers that wasn't put in the that wasn't clear in the previous law. Overall, there is no doubt, like with any new regulations, there is additional cost to complying with the new law, and we all in the banking sector is going to have to figure out how to become more efficient in complying with the new regulations. But overall, they already, as you said, make what is already a good situation better by taking control and governance and protection of the savings of the nation to a new level. In terms of financial inclusion and fintech, I think the law explains very clearly, or actually starts to stipulate new articles that govern the work of fintechs, that govern the work of e-commerce companies. And these are usually actually very forward-looking actions from the regulators and from the policymaker or from the lawmakers in Egypt, because we've seen in many countries accidents do happen when innovation starts ungoverned or unregulated. Of course, the counter argument to that is that, and I'm sure the regulators are looking very carefully at that, is that as they regulate and as they enforce the articles in the new law, they make sure that innovations is not stifled, but rather protected and nudged forward until it actually continues to take the industry forward. There's no doubt that that we all in the banking sector right now still, it costs us too much to serve and acquire customers. The direct cost and the variable cost across the industry to serve its customers, it's still very high. Egypt is a middle income country as per the World Bank, and the revenues contributed by bank customers in any middle income country is it at a certain level, which makes the ability to serve the underserved or the underprivileged sectors of the economy even more challenging for banks. We all in the banking sector are trying to work with the new regulations and the new articles to try to find ways to cut deep into the way we do business, and in a way that would significantly reduce or cut into the cost of serving the millions of Egyptians that we currently serve. I'll stop here and see if welcome any questions that Elena.
Thank you. Thank you, Ahmed. Thank you very much. Can I just make one sort of quick question to Ahmed about the financial inclusion in particular? The financial inclusion has been subject of debate for many, many years, and it is viewed as essentially as a must for Egypt to enjoy sustainable development, that we have to have financial inclusion. Now, from sort of an outsider's perspective, it seems to be a question of awareness for the public, financial literacy, in other words, gaining or regaining the trust. And this brings up the question of taxation. Dr. Ziad mentioned earlier there are some provisions, new provisions that deal with bank secrecy. I don't know what these are, but my question is, do you think these new provisions, will they in any way impact positively or negatively on the ability to regain the trust of the public and make sure that, because many people until now are wary of banks because they feel, oh, but the tax authority may have access and then I'll have problems. So you have two things happen. Either you're not shown the true state of affairs, as I'm sure you know, or especially in rural areas, I'll just stay away from the banks. And I think these are two of the main challenges of achieving true financial inclusion, because you know very well, the law of penetration in Egypt is extremely low in terms of bank accounts. Quick comment, please.
Well, that's a very interesting question, Karim. And actually at CIB, we look at financial inclusion differently a bit. To us, financial inclusion is availing access to financial services to the wider community and as to the whole population. And by financial services, I mean access to savings, access to borrowings when the customer need and want, access to insurance, access to facilitation of payments, and facilitation of trade for the small companies. Now, as I mentioned in my previous response, the cost structure of commercial banks, by definition, makes the average cost to serve and acquire customers still at a level that makes the revenues from bank customers in Egypt has to be at a certain level for the customer to be bankable, for it to be economic to serve a bank customer. And that's, I guess, the number one challenge that the noble cause of financial inclusion faces, because policymakers in Egypt, the regulators, want to make it economic in order to make it sustainable. And the cost to serve and acquire right now is still, all the banks in Egypt are actually finding ways, and the new law opens the door to regulating new entities that would allow banks to cut through their cost structures. We're certainly trying our best to do that. And I think within the next few months, banks are finding ways to serve customers in a significantly lower cost way.
Thank you, Ahmed. Thank you very much. Okay, so we've heard the legal perspective. We heard from the major bankers, publicly owned bank, privately owned bank, dealt with the corporate side of things, as well as the general side of things, and the retail and small business. So now I will move to Elena, Managing Director of EFG Research. And basically, having heard all this and listened to all this, Elena, the question to you now is, how does the market see these changes? How does the market view the new provisions in the law? Do they see this as positive, as negative, as neutral, as they say in market lingo? And specifically, does that make, I mean, we all know that banks are a favorite in the market for investors. We know that, for example, CIB is the proxy for the performance of Egypt on the stock exchange. So my question is, does that make banks a more attractive investment? And if so, why? Or not so much? And again, if so, why? Elena, over to you.
Thank you very much, Karim. Thank you for inviting me to this panel and to take part in this discussion with the leading figures from the Egyptian financial sector. I think, generally speaking, the perception particularly from, I'm referring mainly to foreign investors on the Egyptian banking sector is very, very positive. If I compare with the other markets that we cover at EFG Hermes, whether in the MENA region, in frontier markets. One of the reasons is the structural credit growth or financial asset growth story. As some other panelists have mentioned before, the penetration of banking accounts is very, very low. The penetration of credit penetration at around 38%, 40% of total GDP is very low compared to countries with similar GDP per capita. I'm not comparing necessarily with the GCC, but with the other countries in North Africa, Tunisia, Morocco, for example, with fairly similar levels of GDP per capita. And I think this has been mainly the attractiveness of investing in Egyptian banking stocks is the long-term growth story because of underpenetration, because of population that is growing rapidly and because of very attractive demographics. And I think the area of financial inclusion, it's an additional positive that brings the law. I think after covering the sector for a long time and speaking to investors that have been looking at Egypt for a long time, I think there has been a bit of disappointment with the pace of financial inclusion. So we've been talking for, at least in my case, for over 10 years about penetration of SMEs, of access to credit from very small companies. There has been a significant improvement, and there are companies offering now these services, including EFG Hermes. But I think the pace of development has been a little bit low, partly because of the macroeconomic context, and also partly because for a while there was a very high level of interest rates. So if the new banking law speeds up this financial inclusion process, that's going to, a priori, that's viewed very positively. Also, financial stability, strengthening of capital base of banks. Generally speaking, most of the banks are very well capitalized. They have a decent buffer of capital to cope for any unexpected events. But it is true that there are also a few small banks that may not, I'm not sure what will happen eventually, but they may be taken over, or there could be a little bit of consolidation in the sector if some of the smaller banks cannot get to the 5 billion minimum paid in capital over a period of time. And I think this is also very positive because it is better to have a banking sector where you have stronger players and where you avoid irrational pricing from very small players. And I think lastly, on the corporate governance, I don't think generally there was a concern in the past from investors. I think what has been mentioned is that the board of directors probably need to be a little bit more diverse, need to have more members in the board of directors with the directors bringing different experiences, whether domestically or regionally. So if there is any change on that regard as well, that will be also another positive investment trigger for Egyptian banking stocks. So I think generally very positive. At the same time, I don't think the details of the banking law have been really or generally speaking, international investors know very little about the banking law. I think on one side, because there is only a version in Arabic to start with, and also because it's only been published recently, and perhaps the pandemic has slowed down a little bit the implementation. But I think the general perception is that it's good for financial stability, for financial inclusion, and for corporate governance, but there is not a lot of awareness about the details. So I think if from the banking community there is also better communication with the investors at large, that would be positive as well.
Thank you. A quick question, Elena. Ahmed mentioned that there is increased additional cost associated with implementing the new law. And he also referred to a sort of a hurdle phenomena in terms of customer acquisition, especially amongst the small, the small retail and so on, the financial inclusion aspect. Do you see this as having any significant impact on bank profitability, or not really?
Not really, because what we think is that any additional cost pressures that banks may face will be, at least over the medium term, compensated by the additional revenue generated by onboarding new customers, by increasing cross-selling within the existing customer base. I think, to be fair, also at the aggregate level cost-to-income ratios of Egyptian banks, at least for the private sector banks, are not very high compared to international with the international banking sector. So even if there is a bit of an increase over the medium term, I don't think that wouldn't be an investment negative, because actually the level of costs efficiency is pretty good in the Egyptian banking system. To some extent, it could be argued that this is because when we look at the asset mix of banks, there is very little credit compared to banks in other geographies. Loan to asset ratios are fairly low because of over the past 10 years, there has been an increasing focus or there has been a need to invest in government securities. But I don't think there is much of a concern on costs. I think the main concern is on growth. When is banking asset growth going to pick up strongly, and when we are going to see tangible signs of increasing financial inclusion and credit penetration. And the other thing that, if I may highlight as well, is that in some other markets in Africa, mobile banking has been a means of onboarding new customers and increasing financial inclusion. And up until now, at least, the regulatory environment in Egypt has not been supportive enough for mobile banking to become more relevant. So I don't know if this is, I'm not aware of anything in particular on mobile banking that is changing. So if any panelist has any views on that.
Maybe I would like to highlight here concerning your point, Elena. I think it's a very important point when we're talking about the cost of transaction and the mobile banking and the penetration rates. I believe that the central bank recently became very much conscious about, increasing the levels of financial inclusion via mobile banking. The central bank has issued regulations concerning mobile banking, the mobile wallet, basically in 2013 as a tool for payment. However, the level of utilization of mobile banking during that period was very low because the acceptance venues was very little. And it was limited only for the payment of, the mobile, your mobile bill or electricity and utility and this kind of stuff. But I think they became very much conscious during the last 2 years to activate the acceptance, whereby the central bank has introduced the QR code as an acceptance venue to promote and increase the levels of the utilization of the mobile wallet. So basically in Egypt, our studies revealed that there are more or less 400 million merchants in Egypt. So imagine if the penetration rates for acquiring QR code for merchants during the next period, this will definitely help us in increasing the levels of financial inclusion on one part, shifting to electronic payments rather than cash payments. And also there is an important aspect here, which is the value proposition that you can introduce to either your client as an individual or your merchant in terms of cash management solution, instant lending, microfinance lending, and this kind of stuff. So the central bank was very conscious on this aspect last year, whereby they introduced, as I told you, the QR code. And most importantly, that they have provided banks some incentives in terms of cash. When you acquire, for example, certain number of merchants, they can give you a sort of a rebate in return for this acquisition level. So I believe that maybe I agree with you definitely that the levels of financial inclusion were somehow on the low side during the past years, but most recently the central bank was very conscious on activating or increasing the levels of financial inclusion. And in my opinion, I believe that the only way is basically you have to be more geared or focused towards financial technology, improving your payment systems, and this kind of stuff. But we will never, Ahmed was talking about the cost of transaction a couple of minutes back. The cost of transaction will always remain high if the banks didn't opt to go to payment venues and financial technology. So reducing the cost, the only way for reducing the cost is being more geared towards technology, payments, and this kind of stuff.
Karim, if I might, in 20 seconds, I would like also to comment on Elena's point. I know I noticed it's actually going away from the main topic, but it's
it's very relevant. Please go ahead.
Elena, actually, I can speak on behalf of CIB actually here, and certainly most banks in Egypt have either doubled or tripled the number of bank customers over the past 5 years. We've grown from 700,000 customers to near 2 million, including about 300,000 customers we've acquired through the agency bank model on wallets, and near 400,000 customers in the working class in factories where we serve. So financial inclusion, as I said, to us is not only about lending, it's about access to financial services at large. Before lending, actually, savings. And I think savings is more important, access to savings is more important than access to lending in financial services. Access to insurance, access to payments, which Tarek talked about, and then access to borrowing when they need. In most economies, in the absence of deep penetration of mortgage loans, actually the minority of customers need to borrow. So, and we all know in Egypt how people finance their homes. So, I think overall, financial inclusion is seeing already a significant development over the past 5 years. And the law actually now, as it regulates the fintechs and makes sure that they are streamlined into the, now I come to the law, Karim, to the topic of the day. As the new law regulates the fintechs and e-payments and brings them into mainstream, I think it's going to exactly do what Tarek is saying, which is reduce the cost to serve, cost of transaction and cost to acquire customers.
Thank you. Well, thank you all very much. This has been really quite interesting. Nadia, do we have time for some questions?
Yes, we do. Go ahead.
Okay, I have some questions here from the audience. I will start with one which has just come through, and basically the question is, are you worried about the future of the banking sector growth in light of the growing non-banking financial sector services under the FRA? And examples given are investment banks talking about how they can do everything commercial bank cannot do, short of deposit taking, seeding capital schemes, sukuk, etc., etc. So that is the question. I think, well, it's open. Whoever wants to volunteer.
Basically, yeah, okay, Karim. Yeah, I think this is a really very interesting question. I believe that, as I mentioned in my response to you, that still the banking sector captured more than 80% of the financial markets. So there is a very long way to go if we're going to talk about non-bank FIs to increase the level of their market share. However, there is an important point that the non-bank FIs has been, during the past years, has been very agile in doing business. And there were really good examples of that when you're talking about, for example, Value in EFG or any other companies. Still, the level are small. But I think there is a very big challenge for the banks that really we have to move very fast. in terms of making this sort of transformation and capturing new venues and business and using innovative technology to capture new clients. So I believe that, and maybe I'm going to talk here about Banque, that we have been very conscious, you know, about, you know, increasing the level of our business through different venues or different activities, as opposed to the traditional lending to, I would say, the large or the top tier corporates. So again, being more innovative in terms of customer acquisition by using financial technology and upgrading your payment platforms internally. This is very key in order to capture new business. And also another important point, that banks has to tap new sectors of lending. We have been always shy of lending to, for example, microfinance and SMEs. These are very important sectors, and the reality proved that these are very lucrative businesses. Non-performing loan ratios are very low. So banks has to tap into different business activities. For example, Banque, we acquire a market share of 25% market share in terms of microfinance. We have doubled this portfolio, or it was quadrupled in 3 years time, having a clientele base of more or less 250,000 clients, and with a very low non-performing loans ratio. So I believe that it is really the role of the banks to tap new business activities, focus more on innovation and technology in order to increase the levels of financial inclusion. In reality, if the banks really don't move and become more agile, yes, we will see the non-bank FIs, we will see the fintech companies grabbing market share from the banking system. But still, we have an edge, I would say. The banking system still have a very strong edge, because we still have the very large number of clientele, as Ahmed was mentioning now. Maybe CIB is having 2 million customers. Banque, we're having 3.5 million clients. And many other banks are capturing lots of clients right now. So we still have a very strong clientele base, which gives us a very strong room for really here an important point, cross-selling. Cross-selling activities is very key. When we're talking about financial inclusion is not the matter of adding a number of account in your bank. No, it is the level of cross-selling that you introduce to these clients, and also the level of utilization of the transaction itself.
Thank you, Tarek. Thank you. I think to sum it up, really, the answer to that question, and based on what Tarek said and what Ahmed said earlier, really is that the focus should really be on enlarging the size of the cake rather than focusing on my share of that cake. Thank you. Okay. I just want to make one point. There's another question has just come through. That's a bit of a interesting one. Maybe, I don't know, maybe Dr. Ziad, perhaps. The question basically says, will the limitation on CEO term be reintroduced in this clause? And will the new law introduce some form of public communication, public knowledge communicated to the shareholders and the clients post any wrong allegations to the bank senior staff to reinstate the solid position of key banks away from incorrect rumors? Okay, well, that's an interesting question. Dr. Ziad, any?
Yeah, just two very quick thoughts on this. First of all, it's extremely important to appreciate that the new banking law does not in itself introduce new policies. And I say this in general, including when we say, will it improve access to finance, inclusion? It does not do that in itself as a law. And that's not the role of the law. That's not the function of the law. What the law is doing is empowering the Central Bank of Egypt to establish rules in the future on a much more sound basis than it did in the past, because it has legal foundation in the law. I'll take, for example, the issue of dealing with distressed banks. This is not the first time that we have in our legal system a way to deal with distressed banks. In fact, when we had the banking crisis some 15 years ago, the Central Bank of Egypt managed that crisis, merged various banks into each other, took care of some of the trouble management, but by virtue of administrative decrees, i.e. without sufficient foundation in the law. So the law here is providing the foundation for the central bank to act in a certain way. And therefore, even when we talk about financial inclusion, it is not the law itself that will improve inclusion. The law is giving the Central Bank of Egypt the power to issue rules in fintech, in electronic payment, in this and that can lead to this result. So it's an empowering role. Now, with respect to governance, which is what the question was about, it's exactly the same thing. It is not the law that is setting out most of the rules of the governance. It's just giving very broad outlines, and particularly those concerning conflict of interest. But the rule continues to be that the Central Bank of Egypt issues a code of governance, which is had already, and then that banks can issue their own governance rules, provided they are within this space. The issue of CEO has not been changed in that law, and therefore there is no legal term of limitation on the term of CEOs. But this is something that each bank can determine in its own code of governance. And the central bank's rules of governance are indicative. In fact, they follow the principle called comply or explain. So you either comply, or at least you have to issue in your annual governance report what that means. Now, with respect to the issue of the second part of the question, which is about disclosure, we really have to distinguish here between listed and unlisted companies. Now, if a bank is listed, then the vast majority of the requirements to disclose to the market, to disclose to shareholders, to various interested parties come under the listing rules of the stock exchange and not under the banking law. So we have, I think, decent rules of disclosure under the capital market law and the various systems applied in the exchange. And this is where we should look at to improve or to find out more when a bank is listed. If it is unlisted, then it falls much more under central bank disclosure rules. And here I think the rules are quite straightforward. It's a quarterly report, things that are of particular importance, but there is obviously no strong disclosure requirement the way it is when a company is listed, in which case, as I said, it will be subject to the capital market law and the stock exchange regulations.
Thank you, Dr. Ziad. I think this pretty much answers the question. Basically, the central bank is given the tools to make it easier and more proficient for banks to achieve those goals. But at the end of the day, the central banks have the power to correct whatever action they see perhaps not doing the job. So I think that answers the question. I have Nadia, can the moderator ask a question?
The floor is yours, Karim. Go ahead.
Thank you. Okay, thank you. Well, I have a couple of questions, actually. One is, again, I go back to the financial inclusion because I think this really is of paramount importance. I believe that the tax issue, which resulted in the loss of trust to a large extent over many, many years, is key. So my question to Dr. Ziad is, does the new law specifically give additional comfort that the bank secrecy will be protected to the maximum, except of course if there is a criminal cause, etc. But does it explicitly comfort potential clients or clients that your secret is safe with me, or not really?
When I mentioned the issue of bank secrecy in my introductory remarks, I was referring to only one difference actually in the law between this one and the previous one. And it has to do with, under our law, all bank information is secret. It pertains to the bank and to the client, except where a court order is issued to reveal information. The exception to this has and continues to be the power of the public prosecution to either request from the court disclosure of information, or to go ahead, the prosecution itself, to go ahead and ask the bank to reveal information in very specific cases of crimes that are of a state security nature. This has not changed. The only change in the law is that the military prosecution is now empowered to have the same powers of the normal public prosecution, but only in cases pertaining to military crimes. So it's like having two tracks now. If a crime is of a military nature, then the military prosecution had that power. If not, then it falls under the normal prosecution. So basically, nothing really has changed in that sphere. The other change is that the law has streamlined and clarified very much, and I think this is a very positive aspect of the law. It has actually clarified which individuals under ordinary rules are allowed access to bank information, which frankly were all commonsensical, but we had trouble with them because they were not spelled out in the law. So for example, if a team of lawyers and accountants are undertaking a due diligence investigation of a bank, of course you have to have access. This is in the law. If the bank itself is defending if the bank is defending itself against claims from the customer in the court, of course you have to reveal information. So 7 or 8 cases where already established practices have been laid down and very well written in the law, and I think this is a good thing. However, does that protect all information? It's a matter of practice. It's a matter of practice and of culture. But I have to tell you, I am a little bit hesitant when it comes to relating this to taxation, because we also have to be, I'm sure we all agree that one of the biggest problems we have in this country is not only attracting investment, but also making sure that people pay their taxation. So I'm not saying that we should open up banks' books, but I'm saying there is a balance here where we should not protect crime. And frankly, tax evasion is a crime.
Absolutely. I think the key word here, Dr. Ziad, is the balance. Absolutely. Okay. One last question, which I think is really open for everyone, because we've got the top brains in the industry. I have a question that is kind of confusing me personally in light of recent developments. You probably are all familiar with the Glass-Steagall Act of 1933, which, as we know, basically separated investment banking activities from commercial banking activities. The reason for that at the time was primarily to protect small investors and avoid conflict of interest, etc. I mean, I believe there were very, very good reasons for putting this law in place. Now, that law, under pressure from different lobbies, was repealed in 1999, I think, by Clinton. And since then, we saw the big bang and all that. Everybody wanted to become a universal bank, an experience which I don't think ended up very well, because it kind of disappeared. But now I'm a bit confused on what's happening here on the local market. Well, on the one hand, you have, for example, CIB divesting out of CI Capital a few years ago, its investment banking arm at the time. And then at the same time now, we see a big spat of acquisitions. Banque news mentioned that they are in discussions or advanced stage with HC. Banque acquiring CI Capital. National Bank acquiring Faros through Al Ahli Capital. So all these indicate that commercial banks are going in force into the investment banking field. At the same time, you have EFG looking to acquire controlling stake in Arab Investment Bank along with the fund. So it's kind of getting a little bit muddy. Can somebody explain what's going on?
Can I say something from a legal point of view first, and then let my fellow bankers respond to the policy aspect?
Please.
We continue in Egypt and have never deviated from applying a universal model banking formula. Banks retracting from a universal model have done this on the basis of their own internal policies. But the law fundamentally has never gone as far as to prevent or restrict universal banking.
Okay.
The only thing to bear in mind is that if a bank invests in a company and becomes the owner or the majority owner, then it's an investment. We look at it as lawyers as an investment, and that activity is then governed by the non-bank financial regulator, that is the FRA. Unlike if it is doing some of that activity from within the bank itself. And I think this is where perhaps the bank would like to also draw the distinction. Thank you.
Thank you. No, because we talked earlier about the powers of the central bank as the regulator for the banking industry, and then we have another regulator that regulates non-bank financial activities, including investment banks and so on. So really, it's a bit confusing. If a bank owns 100% of an investment bank, I mean, ultimately, it will have some regulatory powers for that subsidiary of the bank.
It will, but the activity itself will continue to be regulated by the FRA, 100%.
No, I understand that.
Except that the bank, of course, the central bank can issue rules and tests when it speaks to its own banks. You are not allowed or are allowed to invest in those activities in the following manner. For example, when the central bank issued rules that told banks how to invest in consumer finance companies. But the company itself has to be regulated by FRA.
So I go back to our banking colleagues.
So
what's going on?
Like Karim, I think the answer is very simple. Basically, when we are looking right now about increasing our levels of business, definitely we have to increase our product offering. So product offering is very important to create new business opportunities and to also increase your ancillary business from fee-based businesses and this kind of stuff. So adopting this model of universal banking approach, complementing many business, as I mentioned a while ago, that banks still have a wide range of clientele base. So we have to cater them with providing very wide range of product offering. So definitely it's very important when you're talking about a commercial bank right now, looking into establishing or having an investment banking arm. This is very important, and vice versa when EFG, as you're rightly mentioning right now, thinking about acquiring a bank. Definitely the synergies and the cross-selling opportunity will be good. And here it will increase the competitiveness of the sector in terms of introducing new kinds of products and services, and diversifying the ways of doing business rather than being conventional all the time. We were talking a while ago about creating other lending venues like securitization, for example. Or factoring, or this kind of stuff. So definitely complementing your businesses, acquiring new companies, either in the investment banking sphere or in fintech or in non-bank FI. I think it also complements to the overall ancillary business of the bank, and eventually it serves our clients.
Thank you. Yes. I'm not. Yeah. I mean, it's just very interesting because, I mean, you mentioned sukuk, securitization, factoring, etc. Now, all these essentially are credit products. They are lending, whichever way you call it. These are lending instruments, which is the purview of the commercial bank. That's the core of their business, is lending, whichever form. But when you come to the pure investment banking, by that I mean the advisory, the underwriting of securities. I'm not saying you shouldn't do it. It's been done, and there are some successful models, particularly, for example, HSBC. They're doing very well on both counts. But what I'm saying is, if we're going that route, and obviously we are, I would suggest that there should be a new set of very clear and strong rules to deal with the inherent conflict of interest, because there is conflict of interest, for sure. You cannot be advisor to a client at the same time your bank is maybe taking action against it or whatever. So what I'm saying is, this is a whole new set of challenges in terms of conflict of interest that should be addressed.
I agree. As maybe I will take from Dr. Ziad what he was saying, I think this is the role of the regulator here, being the banking supervision or the financial regulatory authority on the other hand. And basically, I can see that there has been very good synergies during the past period between the central bank as the banking regulator and the FRA, whereby we can see there are the deputy governor sits on the board of the FRA, and the head of the financial regulatory authority sits on the board of the central bank. So this the industry is evolving, and basically the role of the regulator, they have to keep aligned with the developments in the market to avoid any sort of conflict of interest and increase the governance level in the financial industry at large.
Great, thank you. Ahmed, I think you want to say something.
I was going to comment very quickly on the interesting example you mentioned from the Glass-Steagall Act. The number one reason or the number one driver for that piece of law was on the back of the 1929 Great Depression, which most economic historians say that one of the reasons it was so deep that bank deposits, the savings of the nation, were evaporated with the fall of the capital market.
Wall Street, yeah.
So Glass-Steagall actually primarily separated the access of investment bankers to the bank deposits. Just clear, and it opened the door, of course, afterwards to the FDIC, Federal Deposit Insurance Company or corporation. I can't remember exactly what's the name. And what is comforting today, and by the way, recently we've heard of the ring fencing in the UK, and to be able again to protect the savings of the nation, the bank deposits, from being deployed into high risk bets by investment bankers. I think this has been the number one. Of course, everything that has been said is right. Now, so the question is right now, does the regulator in Egypt have enough capabilities to protect those savings from the potential risky bets of investment bankers? The answer is absolutely yes, at least in my opinion. So that trend line, I don't think is I don't think it's neither bad nor good. It's just what it is. And I think the downfall, there are triggers in the system that would allow the regulators in Egypt to protect against the negatives, which has led back in the early 1930s from the establishment of the. So that's my only comment on it.
Thank you.
I would just have I would like to add a short comment here concerning this point, Karim, that still the Central Bank of Egypt is insisting to keep the deposit taking only through banks. And this is a very important point. They don't allow any sort of deposit taking unless it is from the banking system. And
I think that's absolutely correct. It has to remain this way in my view. I'm an old world person. So anyway, we'll see what happens. I have one more question from Mansour Kilada, does the new law empower the Central Bank of Egypt to establish a depository guarantee mechanism similar to the FDIC, the FEDIC that Ahmed was mentioning? And this arguing that this will enhance the comforts and potential clients for depositing money in the bank. I think that actually goes back to an earlier question, which we wanted to put to Dr. Ziad, is it is accepted commonly that the Central Bank of Egypt stands behind any banks in terms of depositors' money. They have done that already in the past. We saw that with BCCI and I think it was Banque or somebody. So, so the question is, do we have in black and white something that says Central Bank stands behind depositors' money, either directly or through a similar mechanism to the FEDIC? Dr. Ziad, perhaps?
Well, the short answer is yes, we do have in the law provisions for a deposit coverage fund. And that's the fund where all banks in Egypt will be members, actually, not just payers. They will pay, they will be members, they will sit on its board of directors, and it's under the supervision of the central bank, but it has its own independent legal personality. So there is a FDIC-like mechanism. Now, your question, Mr. Helal, is different. We have, for a long time, since the last 2 banking laws in Egypt, not just this one, we took the approach of distinguishing between, what is known in the literature as explicit guarantee and implicit guarantee. And we have in Egypt abandoned the approach of an explicit guarantee, because I think that's right, because it obviously increases the moral hazard immensely. It puts public funds at risk where perhaps they do not need to be spent foolishly if it's, if there is no justification. And so I think it was right to abandon an explicit guarantee approach. So if you ask me a legal question, does the central bank guarantee every money in the banking system? The answer is no. On the other hand, our whole system has been built around the implicit guarantee, whereby it's the practice in the market, it's established, it's happened before. Now, add to this that in the new law, the chapter on this dealing with distressed banks gives the Central Bank of Egypt extremely wide powers to manage the distressed bank, to reduce some of its debt, to postpone dividend distribution, to stop payment of salaries to the senior management, to capitalize some of the debt. So it allows it a very large scope of tools by which to save the bank from failure. My short answer is we have a provisions for a deposit insurance or a deposit guarantee fund. We do not have an all-out explicit guarantee on deposits, but we have a very strong culture and framework for implicit guarantee. And I think that's the right approach, by the way.
Thank you. Thank you very much. Nadia, do we have time for one more question, or we're out of time? Hello?
I think that's it. I mean, it's up to the panelists if they would like to, but usually we finish on time. Okay.
Well, I have one last question. If okay. Put it, it's from the audience. So if let me just put it out to you. The question is about the transformation to Basel III, especially where it pertains to the calculation of capital adequacy ratio and the treatment of sub-debt as bail-enabled instruments. The latter has been clearly stipulated in the new Banking Act, especially with regards to the bailout fund, which banks are expected to contribute to over the coming 10 years in line with a portion of the deposit base. Has this fund been established, and what is the timeline for it to be streamlined as compliant with Basel III? Thank you. Any volunteers?
Well, I think Dr. Ziad addressed the point on the fund. I think this is what the audience is. And on the capital adequacy, I think we all know in Egypt, capital adequacy ratios are already higher or more conservative than most other indices. I think Elena can vouch to that. Liquidity ratios are usually more stringent. So, and I hope that gives the right comfort to the person who posed the question.
Yeah, I think so. I think it's been very well articulated by Dr. Ziad earlier and confirmed by yourself. So I think that that is all. I would like to thank all the panelists for their time and their insightful contribution, and of course to BEBA for organizing such a timely and really interesting subject. Thank you all very much.
Thank you.
Thank you.
Thank you very much. Thank you.
Bye.
Thank you.
Thank you
Bye.
all. Sorry, next time هنحط بس ابعتوهولي وانا احط.
ابعتهولك يا نادية. Thank you very much.
All right.
طارق بس حط
Bye.
الترجمة.
Thanks.
ايه ده؟
حط subtitles. Thank you.
Okay, Karim.
Thank you all. Thank you.
Thank you very much. Yeah, bye.
Bye.
مع السلامة.